Murabaha, a trade-based product. Here is the contents of this lecture. Firstly, we will give introduction of Murabaha. Next, we will explain Sharia guidelines of Murabaha. Then, we will discuss stages of Murabaha. Let's come to the first topic. Let's start this chapter with the introduction of Murabaha. Islam prohibits charging fixed interest on money, but permits charging fixed profit on sale of goods. This clears a common misconception that charging fixed profit is haram. Islamic banks therefore use a sale-based transaction called Murabaha instead of a term loan for financing purchase of assets by their clients, especially for working capital requirements. Over 60% of all business volume of Islamic banks comprises of Murabaha transactions. What is Murabaha? Murabaha is a particular kind of sale where the transaction is done on a cost plus profit basis, that is, the seller discloses the cost to the buyer and adds a certain profit to it to arrive at the final selling price. The distinguishing features of Murabaha from ordinary sale is the seller discloses the cost to the buyer and an own profit is added. Murabaha is also called a trust sale. Do you know what is the definition of Murabaha? Murabaha is a contract wherein the Islamic bank, upon request by the customer, purchases the asset from a third party, supplier, or vendor, and resells it to the customer, either against immediate payment or on a deferred payment basis. Basically, this is the sale of goods at cost plus an agreed profit markup. Murabaha deals with providing funded facilities that primarily are covered by the definition of Murabaha, which is Murabaha is particular kind of sale where seller expressly mentions the cost he has incurred on the commodities to be sold and sells it to another person by adding some profit or markup thereon, which is known to the buyer. As it is a kind of sale, there must be a seller and buyer, and something that is bought and sold. The institution is the seller, and the client is buyer. It cannot be used as a substitute for running finance facility, which provides cash for fulfilling various needs of the client. Under Murabaha, the borrower is allowed to get finance for working capital, that is, commodity financing, purchasing of raw material, pre-shipment export finance, and funding against imports to the extent of sanctioned limit. Primarily for short-term, and also for long-term, can be utilized. It is a fixed-price sale, and normally is done for short-term. The transaction can be used in order to meet the working capital requirements, however, it cannot be used to meet liquidity requirements. Under the process of Murabaha, the bank purchased the raw material from the market and would sell the same to the client on deferred payment basis by adding the required profit. Murabaha finance is priced with reference to the prevailing market benchmark, therefore profit is earned from the difference between our cost of funds, that is, borrowing costs, and the markup or profit rate over a Murabaha transaction. Once the profit is fixed, and the subject matter, the commodity has been sold out under Murabaha, it could not be repriced. This diagram illustrates how Murabaha agreement works in Islamic bank. The customer approaches the bank with the request for financing. Islamic bank purchases the commodity from the supplier in terms of agreed price, the purchase price. Once the commodity, if in the possession of the bank, in the actual constructive, the bank proceeds to sell the commodity to the customer for a predetermined price, the sale price comprising the original purchase price and an agreed profit markup. The bank allows the customer to pay the deferred payment of the sale price, even pay in installments or in a fixed time in the future. When the sale is completed, the ownership, as well as the risk, instantaneously transfer to the customer, even if the sale is transacted on deferred payment prices. What is the difference between murabaha and musawama? Murabaha is a particular kind of sale where the seller discloses its cost and profit charged thereon. The price in this sale can be both on spot and deferred. But in musawama, which is a sale on agreed price, without referring to the first price on which the seller has purchased. What are the conditions of murabaha under Sharia guidelines? There are some conditions of murabaha financing, which as follows. Subject of a sale must exist. The commodity must come into the seller's possession, whether physical or constructive. Subject of a sale should be in physical or constructive possession of the seller. The sale should be instant and absolute. Subject matter should be property having value according to Sharia. Subject of a sale should not be used for an Islamic purpose. Subject of matter should be specific and identifiable. Buyback arrangement is not allowed. Delivery should be certain, and price should be certainty. Sale must be unconditional. Murabaha cannot be used as a mode of loaning except where the customer needs funds to actually purchase some tangible goods or commodities. It is absolutely essential that the transaction must be genuine purchase and sale of goods. How many stages of murabaha, and what are these? There are 4 stages of murabaha. First stage is promise stage. Second stage is agency stage. Third stage is occurring possession. And the last stage is execution of murabaha. Now, we will discuss step-by-step murabaha financing. Step number 1. At the promise stage, client approaches the bank for facility through murabaha. Step number 2. At the promise stage, client and bank sign an agreement to enter into murabaha. Step number 3. At the promise stage, client submits the purchase requisition to the bank. Step number 4. At the agency stage, client appoints as agent to purchase goods on bank's behalf. Step number 5. At the agency stage, bank gives money to client's account for purchase of goods. Step number 6. At the stage of acquiring possession, client purchases goods on bank's behalf and takes their possession. AIMS is UK-based world's leading consultancy and educational organization. AIMS offers internationally accredited and globally recognized online certificate and degree programs in Islamic banking and finance to professionals and students from all over the world. These programs include workshops, corporate trainings, certificate, diploma, MBA, and PhD programs. For more details on learning methodology, academic programs, and consultancy services, please visit our website www.learnislamicfinance.com.